How about that, guys? I unplugged everything and tried it again. Hey, and it fixed OBS too. Yes. Well, good morning. Good morning. I appreciate everybody shouting out early enough that I didn't spend 30 minutes talking to myself. I appreciate it. Well, I think I'm going to have to get a new headset because I just unplugged it and plugged it back in and ta-da! Appreciate that, Austin. Awesome. All right. So yesterday, the base case was that we were going to go sideways because we didn't have any of the triggers that we would need for a breakout rally day. But after the stream ended, we really started to get that Mag 7 flow, which is what gave us that breakout. The good thing is since we didn't have any flow and then we started to get it, it made it easy to spot that the breakout was likely going to be fueled by the Mag 7, by market breadth, and so we were able to play it and run it. Now we need to see it continue, right? That's an easier day to run than starting the morning with it and then trying to gauge whether it's maintaining its push or it's starting to lag or anything like that. So, all things considered, if we're going to get a change in bias, I'd rather have it like it was yesterday where we could see the change coming because we had nothing and then we started to get something. So if you were faked out by yesterday's play, then go back and try to study the whole turn yesterday from where we went from not having the 0 day flow and not having the Mag 7 to getting that Mag 7 broadening out and then some 0 day flow as the morning went on. UK's down more than 0.25%. The Dow basically flat, likely because of some of the earnings that are going on this morning. Remember the Dow, it's an index that's different than the S&P 100 or the Nasdaq 100. It's a different formula, different calculation. So you can get one company like Walgreens, or in this case, I think it's probably Hog, or maybe Pepsi or Coke, whichever one of those. Yeah, Coke, I think. That's likely giving it a little bit of a smash over the head. Hong Kong flat. S&P and the Nasdaq barely in the green. I'd still consider it flat. RC Cola. Now, I haven't heard that one in a while. I haven't drank that since I was a kid. Small cap doing slightly better. Japan up almost 0.5%. So one thing to keep your eye on today is when Europe closes. See if we get a change in our market dynamic once they go into the close. We got some Fed speakers today, but I don't see anything coming out of it, really. The biggest threat today is likely going to be the president on Fox TV. Yeah, they got it as a moderate risk. Um, Moderate risk at 1 p.m. So not the Fox interview, but a bit of an address about the Epstein documents, immigration enforcement, and it just kind of trails off there, but you get the idea. So moderate risk from the White House this afternoon, starting around 1, and then possible that he'll be on Fox. I could have swore he was on Fox yesterday, not today, right? Like they were quoting a Fox interview on Bloomberg this morning. So it doesn't really make much sense that he would be on there today if he was on there yesterday. Who knows? So you got the times 1 o'clock and 3 o'clock. All right, CTA positioning is below that 0 line, but I wouldn't get too hung up on that yet. We need to see where it starts to turn, if it's going to turn. And, getting into the new year, just want to see where it goes from here. So consider this like their allocation. They're just dialing back their exposure. This is projected positioning in an upward scenario, assuming an average increase over the next 20 days, as opposed to looking at it in the other direction, a down scenario. That's what it kind of plays out to. And Taiwan Semiconductors is one that you want to keep your eye on. It is a forward bellwether of the broader market, 10 to 12 months in advance. So as long as they can continue to stay elevated with their orders and their growth, then everything else is going to follow. If that starts to dry up and TSMC's revenue begins to drop, then it's like turning off the faucet and looking downstream at what will eventually run out of water. There's some really good articles about that on the Macro Me site, Macro Micro, right? That's one of the things these guys really dig into is TSMC and its forward outlook on the marketplace. So looking at our economic schedule today, we really don't have anything on the calendar. It's more about gotchas, shock and awe, Fed speakers, and the White House. So just like yesterday, the changes that could come in to get us out of this range and get us moving are likely going to come in once the day is in. We're already started, and it won't come from calendar events. Call and put wall are in the same location. We've got an average volume level. 59,000 is kind of right on par. It's just a typical day with that level of volume. We didn't get much of a move through the kill zone, but we are trying to maintain above that VWAP. This is nothing, right? This is a bit like a zipper play where we're not going anywhere. We haven't gotten anything done. And GTFO, we got to get out of the box. Pretty simple setup. Just a lot like yesterday. The difference is yesterday we had an inside day breakout that had already given up. And today we don't have that. We haven't had enough juice to even get that started yet. Nice continuation from Friday into yesterday. Got that higher high and a higher close. Today, we need to figure out what we're going to do with this. Now, plenty of examples in the past where we have the same setup, right? Really big bar, a higher high and a higher close on the next bar, and then a pause day. Well, that would be today, the pause day. Now, it doesn't have to play out like that, right? That's almost too good to, matching this particular move to that previous move, candle for candle. Don't fall into that trap, right? So, yes, so far, this 3-bar setup is the same as this one. And today might be that red doji day that we got back on January 23rd. Just be mindful that we want to play what we get, right? You can start with a bias, but once we start breaking levels, you got to play with what we have, not what you want. If this does play out sideways today, like this day from the 23rd, then we're likely to get some violence tomorrow. And then continue that move to the upside to get us up to 70.25, 70.32, or 70.50 by the end of the week. That'd get us up here into this range. All right, we haven't gotten anywhere close to the ADR lines today. So whichever side we break out, that's the side that we want to target. It's pretty simple. If we break out of the bottom, aim for the lower ADR. And if we break out of the top, aim for the upper ADR. That was easy. The ADR has expanded in the last 6 weeks by over 30 points. We had a 60-point ADR not too long ago. Now we're up to 93, let's call it 94. And that's because it's responding to the bigger moves, right? Each day that we get these really large average daily candles, then it's messing with our average daily range. All right, those were yesterday's drawings, by the way. It's a bit much on this time frame, but yeah, we don't need them anymore. Today's floor pivot is higher than yesterday's pivot. That's bullish. Price opened above it. That's also bullish. We didn't hit that floor pivot yesterday. That's an MDP. So far today, we haven't hit our floor pivot either, and that's another missed daily pivot, but we can't count it until tomorrow when we look back and make sure that we didn't hit it throughout the day. So far, it is, but hand grenades and horseshoes, it doesn't count yet. Close isn't close enough. We are still above the weekly pivot. That's a good start. And if we're going to make any moves today, then we need to worry about the SNR lines. Since yesterday was a smaller range day, today's SNRs are a lot closer. 70.16 and 69.36. So if we do get that breakout to the upside, you'll hit the R line before you hit the upper ADR, and you'll hit the S line before you hit the lower ADR. Those are going to act as a speed bump. If we get back inside this channel, target the floor pivot. If we get under that, target the other edge of the channel and then out the other side. That's the RTH mid, but really it's not much different than the full mid, and you might as well just line up with that. The full mid lines up with the lower edge of the channel, So you do you. You see how it's close enough that it really doesn't matter if you mark one this time or you mark the other. We've already lost the mid. So if we're going to get that breakout through the upside, we got to get back through the mid to even get started. Should be a decent enough trigger. Otherwise, the focus is on getting back down to the low and then seeing what we can do with our Globex low. All right, all things considered, we're tightly wound here. You know, after the big expansions of last week, it's kind of nice just to have this little distribution here. 69.98, 69.88, tight package. We got to get out of this zone to really start getting anything else done. And it's likely that if we stay in here, we can get another day. I think 2 more days would be asking for too much, but we could get another day, one more day here, like through today, if we don't get a big spark that kicks us and gets us moving. A move to the upside above the Globex high or yesterday's high, we're going to run into all this drama from last week. It's from basically 7,000 to 70.20. It's a really wide zone. It should, but we've been getting some odd numbers, and then, you know, with the government shutdown, there's going to be some missing numbers. And we don't have the typical hurry up and wait signals that we normally would if the market was sitting on a calendar event that's coming at us, right? Like if it was non-farm payroll Friday or, you know, some big event like that, we would see this sort of hurry up and wait situation develop. And so far, we're not getting it. So we do have a little bit of a lane or a range here with the point of control from last week underneath us at that 69.32 and this upper range or zone at around 70.11 cog line. That's what we need to get out of. $10-day, 30-minute volume profile and TPO. We still have a disagreement between the TPO and the volume profile's point of controls. It's very likely that we're going to see this point of control move down to match the TPO's point of control, right? So have it down here. And you can see we're looking at a level there. Whether or not we're able to keep it will be the tell, but we we don't have a good profile here. We've got 2 weeks at least before we start to see this narrow, and it's just a big ugly mess. When we look at this, we're looking for distinct patterns, clear signals, identifiable information that can help us moving forward. And if it's just looking like a chewed up piece of bubble gum, then it's not very helpful. right? So if there's nothing there, there's nothing there. There's no reason to try to squint at the tea leaves and make something out of it that just isn't going to help. So at this point, we need to let things clean up a little bit in here, see what we get tomorrow, perhaps. Otherwise, this is just a nasty mess. No new VPOC from yesterday. We already wiped that level out. And nothing is standing out in today's signals. Thin through the top. Lots more distribution in the lower section, which makes sense because we spent more time down here than we did up here. Other than that, there's nothing in standing out of any value or insight. We're back above the 10-day, but just barely. We're cutting back and forth. Can't see it unless I get zoomed in a bit here. 0.5% is still within that collar, right? So just imagine this collar or range around the 10-day as if the 10-day was like a Bollinger Band or Keltner channel. So it's got this imaginary channel around it. When price is in that channel, it can just stay there. Things start to calm down a little bit. Order flows are different. It's a bit like the center of a storm. So we need to get out of that to get anything else done. It is healthy though. Nothing, absolutely nothing wrong with being 0.5% above or below the 10. It's a good place to be. And it shows that we're not overbought, we're not overextended, we haven't moved too far too fast, and it doesn't owe us any sort of pullback or anything like that. We're near 1% above the 10-week. It's a good start. It gets us close to these previous highs. But what I've been looking for a while now is an end to this lower high regime that we've been getting. So since around May or June of last year, we started this journey. Eventually, it's going to break someday. And what we're talking about is 2.5 or 3, maybe even 3.5% above the 10-week. So if you was to shop around for some really cheap lottery tickets, you want to shop at price targets that are 2.5 or 3% above the 10-week moving average. With the move that we got yesterday, it might have seemed like a lot, but we're still nowhere near the edge of the weekly expected move. Got a long ways to go. Another 50 points. If we got to 7,000 last night or yesterday, the weekly expected move edge is 54. We've got room to go. All right, so this was the tell from yesterday that we didn't have. In the pre-market, you got an opportunity to spot if we have enough signals for a breakout rally day. The good thing is if you don't have them in the pre-market and then they show up later on, well, it stands out because you went from having nothing to having something. It's trickier if you've already got some signals suggesting we could get a breakout, because then you have to gauge those signals and see if they're increasing enough to get that breakout. So yesterday we didn't have any of the signals from market breadth or from the sectors or the industries that was up in the pre-market. But it's what we're looking for when we're on this page every morning. Looking at what's down today, we got Bitcoin, gold, gold miners, financials, nat gas, China, although China is not down enough. The benchmark is 0.5%. We're just not there yet. But we got a lot of China names here, and none of them are above that 0.5% yet, or down 0.5%. Looking at what is up this morning, we got the Mag 7 up volume is up. That's a good one. But that's not enough. It's one Mag 7 tool, and we should be seeing things like chips. That should be up a lot more. Maybe cloud computing or some other tech, even just generic tech like XLK would be good. We got mags down here, flat. So if we're going to get that breakout rally day today from software and tech, then where is it? It's not here yet. Just like yesterday, wasn't there yet. So keep your eye on things like IGV, expanded tech, and cloud computing. Those two are good. Same with chips. That'd be another really good tell. And then, of course, generic tech like XLK be a good one. And mags. All of those will be a tell to see if we're getting that software as a service and the Mag 7 push that helped us get that expansion yesterday. Got a pretty good gift here, all things considered. Tight range, nice clean price action, clear lines. Get through the half to challenge the low. Get an inside day breakout. I'll be looking for that reversal if we do. If we get that inside day breakout. Because there's no reason to think that we're going to continue any expansion to the downside. And if we get a topside breakout, I mean, we got to continue to play this as we've been measuring it. We're still looking to make the top of the box, right? That's the idea, that we continue this drive just like this one or that one. We're now playing that one. So looking to get back to the box, right, to the top of the range. Now we're close, so we could get that inside day breakout and jump right into that stuff and fall back down again. Depends on how early we get up there. And 70.50 still looks good, or 70.32 cog line. I like that as a structural level to focus on if we can get above that 7,000 line and keep it. But we got to get up there and get it first. Pretty simple day, all things considered. Watch for that market breadth. Keep your eye on the news. Everybody be careful, be safe. I'll see y'all tomorrow.